Yay. All right.
Hey fam, another episode of Good, Bad, and Ugly with Real Estate. I have my great friend April here. Hi
Yes.
April. So me and April met, shoot, it's been like 3 weeks now, right? Something.
Oh, yeah, about or maybe about a
Oh,
month.
oh,
Yeah.
yeah, we met at Owners Club in Scottsdale, Arizona.
Yes, and you were
I
very
was
gracious.
right. I was her first interview there at the site, and I tried to make her my first interview. Told her I would return the favor, so
Yay.
you are my first.
Awesome.
So, April, tell us a little bit about you.
Well, I live in South Florida. I'm actually a Floridian native, and I'm a real estate agent here. Been in real estate for 7 years and have always invested in real estate, throughout my adult life, but very traditionally and very slow. And about a little over a year and a half ago, after searching for quite a while, as far as like how do people scale so quickly with, their portfolios and things like that, I found Pace Morby, one of our mentors, and joined this amazing community, Sub Two. And now you and I are also part of Owners Club, which is just a whole nother level of investing, people that are doing great things. And, honestly, the reason why I joined Owners Club, might be a topic of why what we're going to talk about today, is, just to find people that are doing bigger things than I am. But I'm not sure if I went over the answer, but
Oh, you
um,
went perfect, perfect.
yeah, real
You
estate
might
agent.
have actually cut into some of the questions I had for you, but that's okay. Well, we'll just go with that. It's not scripted, so we'll just go from the seat of our pants. I've learned that you try to do scripted stuff, things just don't work out. So just I'm gonna
Yes.
feed off you pretty much. So
Awesome.
you said you've been doing it your most adult life. What have you done as far as like what kind of purchases or what type of investing are you interested in doing?
So I was doing just single family homes. Like I said, when I was just doing it traditionally, it was every few years I would, buy a house, live in it, fix it up, rent it out, buy another house. So I was doing that, but very slowly, and also living life and raising children and all those great things. And then now in the last, I would say about year and a half, in my first year in Sub Two, I just wanted to know like how people scaled. And I thought, wow, if I could do like 5 or 10 single family homes in my first, or doors, I would say, in my first year. And I also really, really wanted to lend out money and make my money work for me. So I wanted good returns on my money. And if I could, at first I was like, if I could get 5 in a year, and I was like, okay, 5 to 10 in a year. So my first year, I actually increased my portfolio by 30 doors. And thank you. And I also lent out all my money. So with great returns, which I thought were great returns because it wasn't making that much. It was making about 3 to 5, maybe 6% prior to this. And I would say in that year, I put everything into a few different investments, making between 12 and about 18%. Even though now I've learned, you learn and you grow. Now I have my money in, or about to go into, bigger investments with larger returns. And the other thing I did in that first year was I learned how to raise money. And I actually raised money. I was able to buy my first purchase, a single family home out of state with somebody else's money. I renovated it with somebody else's money. I forced equity, and I'm paying my private money lenders. And I now have a tenant in there, which is actually paying down that private money. I'm about to refinance and pay a much lower monthly mortgage, PITI. So I thought, wow, this is incredible. So I was pretty happy, and all of that I did while working my business, really, which is a real estate agent business here in South Florida. Very, very busy. I basically got into Sub 2 January 23 and ended December 23. And it was a very busy year for my business. So I was fairly happy with what I did.
So you said you started to learn how to capital raise and you use other people's money to buy the property to fix up. Where did you, since you didn't know anything about capital raising, Like, who did you go looking for to borrow money from? How did you negotiate your terms?
So I just learned from being in this community and learning all the creative ways that people are basically building their real estate businesses. I am not a wholesaler. Okay, so I wasn't going to start a wholesale business. I wasn't going to join a wholesaling team, as far as acquisitions or dispo or any of those things. So I had to figure out my focus and the things that I wanted to focus on as far as how to build my this is really, a side hustle that's grown into more of a side hustle. I just wanted to increase my passive income. So, I, like I said, first learned how to creatively get into real estate deals. And one of those ways was buying homes undervalued, off market, using other people's money. Now, other people's money can be many different things, but one of the ways is using private money. So I actually went to friends and family. I let them know they know what I'm doing because I was just talking about it all the time. And when I decided to buy this undervalued house out of state, I actually had a investor friend that was helping me, knew the market there, sent me the comps, assured me that, and showed me actually underwrote the deal. So I knew for a fact that it was a good deal. And then I basically was able to show the numbers, right? You have to underwrite, put all the numbers in and show your lender. So I presented it to a few different people, and one of them said, you know what, I've got what you need. My money's making me about 5%. And I was offering 10%. So they were doubling their money and I'm paying quarterly payouts. And so I was able to show them the numbers, show them the deal, also give them security with a promissory note. Loan is all the loan is backed by a mortgage that is recorded in the county on that real estate asset. So it's backed by real estate, and I also have them on my insurance certificate. So the insurance company knows if anything should happen to that house, they are
Okay.
the lenders. So
Yeah,
they're going to get paid out before even I get paid out.
awesome. And what length of term did you negotiate on that? Were they wanting something quick, or were they willing to do a little bit longer?
It was my first private money lending deal, so I just asked for a year because I know it takes about 6 months for the most part with most mortgage lenders as far as refinancing. Most of them want about 6 months seasoning. So I figured, if I was busy or if I had a lot of things going on, that would give me a little bit of cushion. My lender actually was very happy. She was like, I don't want it back in 6 months. Like, keep it for a year. Because like I said, I was pretty much doubling her money.
And were you paying that so since it was a whole year, so you actually got kind of like an APR at 10%, not necessarily 10%.
Annualized, correct. So it's annualized 10%, and I'm making quarterly payments to her. And that comes up in November. So I need to start thinking about my refinance strategy now.
So you mentioned 30 units earlier. Was that all one investment? Did you buy like a small apartment, or did you actually acquire 30 single family homes?
No, so this is how it breaks down. My first investment when I got into sub two was a syndication. So it was a 22 unit syndication in Pensacola, Florida. So that comprises 22 doors, and I invested in that. We bought that property cash. We're renovating it. It was a motel with just single units in an oval shape, and we're converting that to be short-term rental, and we are expecting that to be worth 2.2 million. So that was my first investment as far as actual, being an LP on that project. And then after that, I bought the single family home. And then I also bought an 8 unit in out of state as well. So I'm sorry, a 7 unit. So I have a 7 unit. I have the single family home, and I have the 22 units in Florida
So as an
that I
LP, you were using your own money in those cases, not somebody else's.
Right. So that in that case, like being an LP, I mean, for the most part, I think you want to use your own money because that's my money that I wanted to make grow.
Sure.
way more than what it was doing at that time. So that was one of my investments. And then I did four other private money lending scenarios, which I've gotten two out of the four back, one of which is coming back a little bit early, and then one of which is running late because they haven't been able to sell it at the price that they thought, so they're dropping the price, and I'm hoping they get that sold within the next month.
That goes to the title of my channel, Good, Bad, and Ugly, right? So you have one that's going to pay
Yes.
early, which is great. Then you have somebody who's a little late, which is not so great, but it sounds like they're communicating with you so that you're kind of comfortable with them because at least you know what the situation is.
So yeah, I mean, I could talk about the ugly. I've had some ugly experiences too.
Sure, please share.
It's all not all rainbows and unicorns, that's for sure. So, okay, where do I start? Okay, so for the first one was my first private money lending deal. I didn't know a lot. Of course, I was listening, absorbing, learning, looking over the documents. But I honestly, to be completely upfront, I probably got what a lot of us get, which is I just wanted to do my first deal. So I put the cart before the horse. And, full disclosure, I'm not embarrassed to admit that because I'm human. And these are the type of things that, people do. And I thought I was doing the right thing. I thought I had all my bases covered. And some people are lucky enough to be really connected to like high level people that guide them step by step. But we all have the information. So it's nobody's fault but myself. So I basically formed a relationship with somebody in the community, two people actually. They were partners, but one of them I was more friends with, and I pretty much just I went a lot on trust. There were a couple of things in the documents that I required that they change and asked for them to change. A couple of them they changed. One of the things they did was not I asked for did not change, which was the late fee. And so, but it was like last minute, I was out of state and I'm like, you know what? Let me just, I'll let that go. So I let it go. The communication on that deal was not great. It ran later than it was supposed to, and nobody really informed me. And when it was brought to my attention, I let them know, hey, like what is it? What's the new timeline? What can I expect? They weren't really communicating. So communication was a big issue. And finally, they said, yes, we're going to get another lender to get you out. But that took several months with me having to follow up with them a lot. And then, long story short, they did end up paying me. They asked me, they're like, what do you want for late fees? And I was like, honestly, at that point, I just wanted my money back. I wanted to be done with it. But I did remind them that like that's exactly why I wanted the late fees changed, because this certainly isn't enough for running late on this project.
Especially
So,
several
and
months.
it was a few months, yeah. So, but I did get all my money back, and they were always consistent on their monthly payments. They paid me monthly. I got my interest, so I just figured, you know what? As long as I get my initial investment back, they've been paying me my interest. Lesson learned. So I didn't really lose. I just didn't get my late fees. Now, the second one is the one that's happening right now. And, the late fees are nice and significant, but she's running late. I know I'm pretty sure she's not gonna make any money at the end of the day. Or very close to no money on this deal. After paying me and all her expenses. So I'm really hoping that one closes and sometime soon. But she has been excellent with communication. In fact, I got in touch with her through a connector. The connector hasn't been that great. Has been okay, but she's been phenomenal. Like once a month, emails me, sends me photos, sends me videos. Now that it's been done and not selling, she actually gave me a call. We discussed quite a few things. I gave her some tips as far as real estate market and all those great things and what to expect and ask for from the agent, which she appreciated. So I think that I think it will sell. I don't think that she's not going to sell it. I just don't think she's going to sell it at what they originally were asking. And then the third one is the 7 unit that I did buy, and I bought that contract for deed. So I bought the 7 unit under value. So I haven't had an appraisal for it at 340. He was asking 280, but the mortgage was 250. So you do a document, it's contract for deed. I gave him the $30,000 cash. Basically the mortgage stayed in place because it's a commercial unit. So the mortgage stayed in place and I'm paying the monthly payment. So I didn't have to get a new mortgage, which is awesome. I just had to get new insurance. No, I'm sorry. I'm sorry. I had to get I had to get new insurance and the mortgage stayed in place. And that's a document that is filed again in the county so that it shows that I am the owner now, although the current mortgage is in place and the seller got $30,000 and I bought a 7 unit with a pretty good amount of equity. But
In our sub, that would be considered a sub two deal in our community that some people don't refer to it as, right?
it's similar, but it's not exactly the same. Um, so since I bought it, actually, I've had a lot. Oh my goodness, I have had so much trouble with tenants. So much trouble with tenants. They call me all hours of the night and day. That was in the beginning of the year. They were calling me, calling me, calling me. That was also my busiest time for my actual business, my traditional real estate business here in South Florida. So my head was spinning. Like I just honestly, it got like I probably in March, it got to the point where I was having like major anxiety, like almost a nervous breakdown, just like too many things going on. I had a very bad trouble tenant. He finally left the unit a mess. I honestly think he got one of my other tenants on drugs. So then he became a problem tenant, although before that he was fine. Like, so long story short, I now have 6 vacancies.
Oh wow.
And I went through I hired property management just because of the stress. I couldn't handle it anymore.
Right.
And the cash flow on it, I could factor in property management, no problem. But I didn't think I needed it because it was almost all full and everything was running well. Well, it wasn't anymore. So I did hire property management. That property manager failed basically. For 2 months, I wasted time and money. Now I have another guy on there. He so far he's been performing and he actually texted me today. We got another tenant that is approved. So, I'm hoping to get, one more tenant in there now. So we have adjusted the rents a little bit. It's summertime, which he says is a little slow there. And I've checked with a couple other people where it is. So I'm crossing my fingers that we get, tenants in there and I start to cash flow on that property again. But I'm giving it a little time. Definitely need a little time to stabilize. But that experience really made me think about buying more units, especially out of state. I just felt like the loss of control, like I felt like I didn't have control over it. There was very little I could do. I was really leaning on other people to show up, to say the right things, to do the right things. I don't know what they're seeing. Like it was just like too much that I couldn't control. And it made me think I'm not going to do this again. And I really thought twice about scaling on, multiple single, even if it's single family homes,
Yeah.
which leads me to basically where I am today.
Hey, I feel you on that. I had properties in the Panhandle of Florida and went through three property managers before I decided to sell that property. And then
Yeah.
I had properties up in Minnesota, which I didn't have anybody that I knew that I could use for boots on the ground. So
Yeah.
anytime I needed like a doorknob change or there was an issue that like, the kitchen sink would not turn off. There's
Yeah.
sensor ones and I couldn't find anybody to do it. I had to call a realtor that actually sold me the house to go over there just to turn off the water underneath the sink
Yeah.
to um, help the tenant because it was a short term rental.
Yeah,
So
it's like all these little things that like if it was like 15 minutes down the road or whatever, you could just pop by, but it's like all these little things. And then I had to find somebody and then pay somebody and make sure that that somebody is doing it right. It was a lot. I mean, it sounds like doesn't sound like much, but at the time it was a lot. I was like, it was too much. So I'm done. I'm pretty much done doing that. Now I just need to get I got to get myself to the point where my money is earning enough to where I'm super comfortable. So now, yeah,
was
I've
now South Florida your market for your single family, or what is your market now?
so South Florida is not well. It would be, but the problem with is that Florida in general and South Florida especially, because I live in Southeast Florida, which is extremely expensive, not easy to find deals. And even if you find a deal, with the
Interest
home insurance rates and also property taxes, like it's
rate.
expensive. So you would have to find like just a really great deal. And there are sub two deals that I see, but again, I don't have the time or the convenience to, go visit properties even an hour or 2 hours away. So I've completely shifted my model to just investing. I'm actually in a fund now. I'm raising money, which was my 2024 goal, to just raise money.
So I'm gonna kind of pivot there because you and I had a conversation a couple weeks ago. I'd like to highlight that you have a new opportunity that you were given. You'd like to share that?
Yes. So I'm now raising capital for a fund for mobile home parks. And the mobile home parks, to your question about, my market or my area, these mobile home parks are being bought in states in the Southwest, the Great Plains, and the Midwest. So it's nowhere near where I live, which is fine because there are many reasons why you may or may not want to buy a deal in Florida. If you can get it at a really great price, you should definitely consider it. But Florida has its own set of concerns that you just have to know. And if you don't know what to look for or what you're getting into, it could be very, very challenging. And our weather, like hurricanes, is one thing. Home or insurance is a huge factor. Property taxes, there's just a lot of things that you have to consider. And then yeah, so an experienced operator may or may not know, but I love the fact that we are hitting areas with a lot of great research and data as far as why we're going into those markets, with lots and lots of add-on benefits, right, to increase value. So I'm super excited about that. And the numbers are phenomenal. So it's kind of an easy sell. If anybody knows anything about investing, return on your money, the initial rate of return or the cash multiple, I feel like it's kind of an easy sell. I mean, I'm investing in it myself. And also, when I do put the numbers in front of investors that are looking for these type of opportunities, they see it too.
So if somebody wanted to invest in your fund because it sounds like a good deal, is there a limit that they can like the lower limit or is there a
Yes.
minimum? I guess you should say.
Yes. So it is a $10 million fund right now. We are raising 10 million. We'll probably get to that number probably before the end of the year, and then we're going to open another $30 million fund. But as an individual, you have to be an accredited investor, and you also have the minimum is $100,000. So you can invest however much you want, but the minimum is 100,000.
Okay, fair enough. Um, I was not going to even try to find accredited investors because I always there's two schools of thoughts every time I go to do research. So for you, those watching this, if you want to know what an accredited investor is, just look it up.
Yeah.
Kind of going back to what you said earlier, so on your 22 unit and your 7 unit,
Yeah.
was it the 7 unit that you were trying to do the short term, or was it the 22 unit?
22 unit.
So that sounds like a value add because you mentioned that it's going to go from what you paid for it up to like a $2.1 million
Yeah.
property. When you got into it, was there a strategy that you guys like a 5 year then turn and sell it, or are you guys trying to do a long term hold on that? What is your strategy with that property?
Right. So that's a syndication. And yes, they do intend to probably, what they normally do is they'll refinance in year, like 3, depending on what's going on. They bought it cash, right? So they can refinance, pull out, pay out investors. So you get quarterly distributions, but then you also get money when they refi. And then at the sale, depending on when they decide to sell. But it should be about, again, 5 to 6 years. That's the same thing as the fund that I'm raising for. So it's cool because the first deal that I did was investing in a syndication, and
Right.
now I am raising for a fund, which it's very, very similar, not exactly the same, but very similar.
Right. If there was some advice you give your younger self And as far as investing in real estate, what would that be?
Just to start earlier, I came I came from the healthcare background. Like I was an RN. Actually, I still hold my license as an RN. And then I went into medical sales in prosthetics. And from there, I actually became a manager and a regional director. And then I exited the medical field completely. It's just, I kind of got sick of it all. And then I got into real estate. And I got into real estate as an agent, just kind of not knowing what else to do. I really was very disgusted in my last industry, which was the medical field. I just, when you're in an industry for so long, you see the goods, the bads, you see it all.
Right.
And several things happened to just like leave me with a bad taste in my mouth. And you know what? To me, that's like the universe telling you, you got to go do something else. There's something else out there for you. Which I am so happy that I got into real estate as an agent. I learned so much. I grew my own business. I did very, very well enough to where I have the opportunity now to invest and also buy creatively and all these great things. But I do wish that I had done that earlier. And I really knew nothing about real estate growing up. Like a lot of people you hear stories about, oh yeah, my family was in real estate. My dad was a big this, that, or the other builder or developer or agent, broker, what have you. I literally only knew like one person that was an agent here that stayed in touch with me for like 20 years, 15 years. And I still know him. Actually, I ran into him earlier today, which was very coincidental. But I didn't have a lot of knowledge. I had no knowledge whatsoever about real estate. So I was in a completely different field and just completely unaware of the potential that you could build and the wealth and the generational wealth, if you do it right, that you can build. So I would definitely say that I would give that advice to my younger self. I don't have a lot of regrets in life. And I wouldn't say that's a regret. I feel like life, has its
Happens when it's
twists.
supposed to, right?
Yeah, life has its twists and its turns, and it does that for a reason. But if I could start investing even earlier, I would have.
So you mentioned that we're both in the same community. How much has having that mentor or the community helped you in your journey, seeing how you're saying that, you wish you knew more younger or earlier? How has that helped you get to where you are now and where you're trying to go in the future?
So I think mentorships are huge in many different ways. Number one, you are learning, right? So in my instance, I couldn't figure out how to scale in 1 year. Like what I did, I couldn't figure that out on my own. So number one, you're gaining knowledge from people that are doing things that you're not doing, understanding different creative ways in this instance, right? And number two, you are around people that are doing way more than you're doing. And that's just like a rule of thumb. When you want to go and do something new, you need to be around the people that are doing it. Like, don't recreate the wheel. Just
Right.
find the people that are doing it and, do whatever you have to do to get access to them. And if that means a mentorship, which I think it's huge to do mentorships, I consider mentorships like paying for quote unquote college, but better because you're actually picking exactly what you want to do. You're going to the heart of all the knowledge, all the information. You're learning from the best, hopefully. I mean, there are a lot of mentorships that you probably have to be careful of, and make sure it's the right type of mentorship. But the one that we're in is amazing because yeah, we all bought into it, but now we're all friends. We travel together, we do deals together, we make money together, we talk about our losses, our wins, we do it all. So I think it's vastly important. And um I'm so happy that I joined.
Yeah, I mean, just from Owners Club, I went from, well, I'll put it this way. I have at least 100 new friends from the spring retreat and then squat up summit.
Yeah.
So just every time we get to go travel and meet each other, I'm meeting new friends, new people to network with,
Yeah.
connect with, right? So you mentioned connectors before. Um,
And be inspired. Like the
yeah,
inspiration when we were in Arizona was phenomenal. Like we were all so inspired by each other. We came back like completely pumped up.
Yeah. So let's see. One last question. For those that may say, "Oh, wow, 100K is too much for me," um, and who may just be starting off with, let's say, $1,000,
Right.
what, how would you advise them, or what's your opinion on how they should get started in real estate?
Well, first of all, if you want to get started in real estate, you have to learn. So do a deep dive on sourcing out people that are doing that are giving you information. Our mentor Pace Morby. You can get a lot of beginner information on his YouTube channel, on this YouTube channel. So listen to Jose because there's lots of valuable information. That's number one. You need to educate yourself. Um, I think I started with that first um, experience where I jumped, even though I had the information, I probably acted faster than I should have. And I allowed other people to push me faster than I should have.
Yeah.
And I actually have guided a few people in the community where they're like, "Oh, I want to do this," and da, da, da. And I'm like, and I start asking them questions. Do you have this paperwork? Do you have that? Do you know this? Do that? And when they say no, I'm like, you are not ready to lend. So it's very, very important, vital that you understand, you learn, you digest and regurgitate until you can regurgitate that information. You
Right.
shouldn't be doing anything with that money. That's number one. Number two, I'm not a gator. Okay. I haven't done like $1,000 lend. I hear that it can be somewhat risky. So again, align yourself with the right people, have knowledge, be able to regurgitate exactly what you're doing and how it should play out, and have all the documents to be very explicit in what happens if the deal goes the way it's supposed to go, but also what happens if the deal does go south. Like what exactly is going to happen, who's accountable for what, etc. So for me, I would say, I've done like more in the like 30 and above. So I've done PML. I haven't done like Gator. So I don't know how much value I can bring to those type of transactions, except that knowledge, research knowledge, aligning with the right people, doing background checks and, requesting a driver's license and finding out how many other deals have you done? Show me other deals. Show me some HUD statements, et cetera, et cetera, et cetera. There's nothing wrong with asking for proof from people that are saying that they are experienced investors.
So for you guys that don't know, Gator is a program under Pace Morby that he teaches people how to lend, kind of being a personal bank for other investors. So if they don't have what they call earnest money deposit, you could give them you can lend them $1,000, and then you guys can determine what the terms are. There are some people in our community that lend 1,000 and get 2,000 back, so they basically double their money. There are some that do it by percentage, where you give 1,000, maybe you get 30% back, so you get $1,300 back. So whatever you and whoever's borrowing from you agree upon are the terms that you'll get and how much money you can make. So it is a way to kind of start small and grow big. As
I would love to do that, by the way. I'm
sure,
not in Gator. I don't have anybody high level that I can kind of, trust. And it's not my focus, so focus is very important too, especially getting into a big mentorship like we're in. And I think it's great because I think, with the Gator lending and the EMD and double close and all those great things, um, you can really, kind of scale, like you said, double your money very quick. Even though it's smaller amounts, you can really double your money very quickly, which is a great opportunity. But again, you just have to be really careful with any type of lending situation.
absolutely.
Yeah.
Well, April, I want to thank you for your time today, and it was great catching up with you again.
Yes.
I'm sure my audience will grab all kinds of nuggets from you in this interview. And are you going to, well, obviously you're at home, so are you going to community camp in September?
Yes, I'll see you there, obviously, because they're having the other one right now and you
Right,
are not there.
exactly.
So we'll see each other in Montana in September. That'll be awesome.
Awesome. Well, I guess I will see you in a few weeks, I guess 6 weeks or something like that.
Yeah.
Thanks
Looking
again for coming on my channel, and we'll talk soon.
Thanks, Jose. Take care.
Bye.
Bye.